All right, so we have a good crowd here. So we are close to 100 people, so it's great. Welcome to the Multifamily Masters Texas virtual meetup. Usually Ben and Ferris out of Houston are hosting it, but both of them unfortunately cannot make it today. So it will be me who is the MC here, but we also have John Montero and Ronnie Phillip from the Dallas chapter who also have joined me. The process or how we do it typically is we have our guests on today, whom I will introduce very shortly. And after that, we obviously have questions and answer session. And after that, we also have breakout rooms. So I hope that everyone will hang around so that once we get into the breakout rooms that you have a chance to network with like-minded people. So why don't we start? Again, my name is Anton Madley. I'm co-founder and CEO of Peak Financing. I'm a co-chapter leader of the MFM Dallas chapter, and two of my co-chapter leaders are also on, John Montero and Ronnie Phillip. So John, why don't you start and introduce quickly yourself?
Yep, absolutely. Thanks for everyone joining this evening. My name's John Montero, based here in Frisco, Texas, just north of the Dallas market. I am a full-time sponsor, owner, and multifamily developer. We focus primarily in the primary markets and surrounding submarkets in Texas of DFW, Austin, San Antonio, and Houston. We buy A and B class assets as well as build from the ground up. So we've got 9,000 units under management, as well as 1,588 units in the development process. So excited to be here. Look forward to hanging out with everyone tonight. I'll hand it over to Ronnie.
Thanks, John. So I'm Ronnie Phillip with the Kingly Group. We're a real estate private equity firm based in Dallas, Texas. We focus on Class A and new development multifamily across the Sun Belt region. We've bought and sold 572 units, and really excited for this call on getting started and buying your first deal. So we have a lot of really good speakers on. So grateful each of you came on to join us, and I'll leave my contact below if y'all want to reach out. You have all the info there. I'll pass it back to Anton. Thanks.
Okay, great. Thanks, John and Ronnie, for the introduction. Now, as Ronnie mentioned, tonight is the topic is how to buy your first apartment building. As a matter of fact, all the three guests have been very active on the multifamily on the apartment side. But Powell also has done quite a bit of outside of that. He has bought a number of self-storage facilities. Powell, on top of that, also is one of the co-founders of the Multifamily Masters. So you actually get a double treat here, so you can listen to the three guests, plus as well as be with one of the co-founders of MFM. And so with having said that, usually we go ladies first, but because Powell is one of the co-founders of MFM, why don't you go first to quickly introduce yourself, Powell?
Wow, that trumps the ladies first. Do you hear that, Mandy? I get to go first. So, okay, well, I appreciate that, Anton. Well, you guys are in great hands. I mean, you got the Texas Multifamily Masters Roundup. You got Anton, you got John. I mean, he said, you guys hear? He said 9,000 units, holy. And Ronnie's been out there crushing it, you know, like in terms of like doing deals and getting things done with people. Awesome. Anton has always been a huge wealth of knowledge. So you guys are in great hands. So who needs Ben and Ferris anyway? You can tell them I said that. Hopefully it's recorded. So my name is Powell Chee. I was one of the co-founders of Multifamily Masters. Started about, let's see, I started I think in December of 2017, right? Started with one small group of 8 people sitting around a table inside of a lobby of a hotel and just discussing multifamily and investing out of state, and we didn't really have an agenda. It was just kind of put together, and we just met and just started talking. Pretty quickly after that, it started growing very fast. Within like 2 years, it had grown to, let's see, I think a year and a half, it grew to 11 different locations. And then within 2 years, it grew to about 30 locations. And currently we have like 40, 50 locations. It's hard to count. You just got one today that somebody said, hey, they want to start another one. So I myself live in Los Angeles. All my investing has been out of state. Anton mentioned I've been investing in multifamily since 2017. Also recently have been involved with adding a different asset class of self-storage. And I can kind of talk about, the similarities and or the differences between like what we talked about today of adding, buying your first deal, right? Whether that's multifamily or self-storage. That's kind of me in sort of a nutshell. Owner operator of, I don't know, like in the last year, we closed 7 self-storage facilities. And I've been on a general partnership of 5 different syndications, not including some of the ones that I just own myself. All right. But that's me. Mandy, pass it to you.
Sure. Hi, guys. I am Mandy McAllister. I live in the Chicago area. I'm a single mama who recently retired myself out of medical device sales with multifamily real estate. Thank you. I primarily invest in the Midwest, not quite as hot a market as where you guys are all at down in Texas or in the Sun Belt. But my focus is primarily owning as much of the deal for as long a term as possible, rather than more of a syndication model. So my portfolio is now 371 units, primarily B class in Indianapolis and Louisville, Kentucky area. I like a very light to value add. And I want to point out too, we're talking about doing your first deal. Did you notice everybody who is introducing themselves doing deals, they have a thing they do, right? I had a friend who was entering into, he wanted to do a development in DFW, and I knew, ooh, hey, my friend John, this is what he does. You've got to meet my friend John. Now he's partnered with the other friend doing this deal in DFW because I knew John's thing. So if you are looking to do your first deal, be able to in 4 sentences say, hi, I'm Lindsay. I buy B-class assets in DFW. Whatever that thing is, that's the thing you got to work on getting really granular in focus. So yeah. David, you're up next, my friend.
All right. I'm excited to be here with a lot of familiar faces. There's a great group of people here tonight. I'm David Hudgins. I grew up in Tennessee, live in Los Angeles. I've been in the entertainment industry for 30 years. I've had a lighting company for 20 years, started buying single family properties in 2007. I have multifamily property in Memphis. And I've been looking in Tennessee and Florida, and recently joined Disrupt doing acquisitions in Tennessee and Florida. I also have GP'd on a 330 unit in Atlanta that we closed on in December.
Getting some feedback, guys. Let's mute your lines, please, if you don't mind.
So the big city we all have our physical preferences. Listen, every woman here.
Thank you.
All right, so we muted that individual. All right, thanks, David. This is still a male-dominated world, right? So it's really great to have Mandy with us tonight. And why don't you tell us, even though it's very male-dominated, why did you make that jump into multifamily? Residential investing tends to be more where also women are active in, but if somehow on the multifamily side it's less so. So why don't you tell us, Mandy, how you made that step?
So, I mean, there's a couple of things there. I feel like just inherently women tend to be a little more careful than men. The act as if gene is a little more apparent with our bros than our sisters, right? So the need to know every little thing about everything, the analysis paralysis attacks us a little more, I think, than men in general. But, kind of my background, I was a Division I athlete. I was, A lot of people told me, oh, I'm from a farm town. Like, you need a bale hay, guys, I got you. But, my town of 800 people, I was the first girl to ever get a Division I scholarship. So I'm the kind of the type of personality that, oh, you want to bet, tell me I can't do something, right? But I feel like at the same time, anytime there is something that's a perceived weakness, that, you know what, like, I get asked to talk all the damn time because I get to be the token girl, but you know what, that gets my voice heard. But the thing is, whatever you think is your thing, if you're too young, if you're too old, if you're too female, if you're too purple, whatever your thing is, figure out a way to make that. You're going to remember me more than any of these other bros because I look different, right? So one thing that kind of hit me when I was doing mailers, just as a little example here, I realized that I'm a single mom doing this, right? So, if I send a mailer that says, when it's time to sell your apartment building, pick us, with my cute little kid on it, you're going to remember that in a way that you're not going to remember the yellow letter that you get 700 of. So whatever your thing is that you're letting yourself tell yourself a story that is your reason that you can't do it, figure out a way to mindset ninja that, to figure out to make that something that sets you apart rather than holds you back. So respectfully, I decline that it's a thing that I should be held back by, because I stand out because of it.
Yeah, great to hear.
That's what makes Mandy awesome. I mean, I love the answers. Mandy's fantastic. So,
what about you, Powell? How did it trigger your interest in multifamily?
I mean, so the first property that I bought was a single family house in Kansas City. Right? I lived in LA. Still live in LA. Bought a single family house in Kansas City. And when I bought that house, I was like, I got it, some equity in the deal and everything. And I was like, you know what? I bought this and I was very lucky. I didn't really know. It's not a repeatable process for me. And I was like, I was just not going to be able to do what I did on that single family house. So I said, you know what? I got to go up. I got to scale faster, a lot faster. So that's what I did. That's what was attractive to me, is that, hey, I could work on buying one property and make sure that one property is the one that, I could focus on that one property instead of focusing on like 8 different properties that I'm trying to buy in 1 year. Focus on one property, right? And just that would help me scale.
Very good. So you're based in California. Did you buy it in California? The first one?
No, that first one was in Indianapolis. So that one's in Indianapolis. So nothing I bought is in California. Everything has been outside of California. Self-storage and multifamily, single family, all of it.
Very good. So guys, this is really the pattern, right? Just because you're not local where the great markets are doesn't mean that you cannot do it. And obviously Powell has been able to do it. What about you, David?
My first deal was a single family in Houston. So I started buying out of California also. I live in LA and couldn't really afford to buy anything. So that was my way to get my foot in the door. I think my down payment was $13,000. So that was definitely affordable. And started buying some more stuff out of state. And then we ended up wanting to scale up and do something larger, do an apartment building. And luckily my wife worked in the light tech industry. So her company was the second largest owner of apartment buildings in the US, had several billion in assets. So she was familiar with it. So it wasn't like it was this big scary thing. And we'd already gotten used to buying some single family stuff out of state. So we bought our first multifamily in Memphis. And I don't know, it wasn't that big of a deal for us. It's kind of manageable because we had taken those little steps to begin with.
I would tell you that, just to like recap of what these guys, both Mandy and David are saying, it's really like a mindset, right? And that was a big thing for me, is that when I first started looking at deals and real estate in general, I was in LA and I was like, well, I can't really buy anything in LA or San Francisco Bay Area where I'm from. It's just like, it costs too much. I don't know, it's significantly different. How much did it cost is so astronomical. And then it was a mindset shift that I started seeing people that were doing what I wanted to do, which was buying something out of state and running it out of state. And just, that was my sort of mindset shift. And, once you're going to overcome that mindset with whatever your hang up is, mine was buying locally. I had to buy locally. I had to buy within 2 hours of me. once I was like, no, I don't need to do that. And there's other people that are successful and I can follow their same path. That really kind of opened up sort of the whole world to me.
Yeah, that's great. Always a question that comes up every single time, right? So it's almost like, okay, so here comes the question, but I think it's really important because it's everyone struggles initially. And when you look back after you do your first deal, it's usually 1 or 2 points that are really standing out where you can say, yes, that's what I didn't think about, or that's what was really a tough piece that I had to overcome. So for you three, what would you say was the biggest lesson or the biggest 2 lessons that you have learned from your first deals?
Hey, Jonathan here. I'm sorry to chime in. Is it okay if I just make a comment really fast?
Very quickly, we have a Q&A afterwards, so go ahead.
Absolutely. So I got to say one thing. I think it was Mandy that mentioned something about getting kind of judged on being young or your gender, things like that. I'll say I was very successful from a young age, and I'm kind of judged coming into this this game. I'm a new agent, just got my license last year, but I'll say I've been very successful at a young age, and I'm always looking to learn and do more. And I'll say to anyone that's in the younger crowd, just keep pushing. There's no discrimination. I know I'm going to do great, and I love these kind of Q&As. This is great. Always learning. My only advice for younger agents is just keep on learning. These kind of classes are the best thing to do. So looking forward to learning from you guys. Thank you.
Thanks, Jonathan. I would say for my biggest learning that, you know, I had done all of this stuff. I got interested in real estate investing at 19. I didn't buy anything with express purpose of investment until I was 5 years old. You guys, I understood NOI. I understood cap rate. I understood how to find a deal. I understood all of the things. I just had to get over myself. So the thing that the hack that I worked up to was, you know, all right, this stoic philosophy idea of let's just figure out what is the worst case scenario. And to me, the worst case scenario is you can't pay your bills and you lose the property, right? So if I can just mitigate the risk to realize that, oh, that building, I can be 43% economically vacant and still pay all my bills. And my at-risk tenants in the middle of COVID, I got 10% of them. Wow, if they're not paying their rent, I still more than break even on this property. Easy way to figure out how to, worst case scenario, get comfortable with it. So really get comfortable with the worst case scenario, and it'll be an easy no-brainer to move forward.
Very good. David, do you want to go next?
I think I had 2. The first one was the lender. Like I had never done a commercial loan before, and it's my first time being a sponsor. And it doesn't really matter if I like the property or not. It matters if the lender likes the property and if the lender likes me as a sponsor. So getting to know a lender and, you know, being in this venue and being able to have access to Anton and ask questions, that's a huge benefit that all of you guys have that I didn't have. I was figuring out on my own. My other thing was property manager. We thought we had a good property manager, then 6 months in had to change and get a different property manager, and kind of learn the second round how to do a better job vetting your property manager. So I think that's another thing that you should spend a little bit extra time with going in on.
Yeah, both great points. Obviously, the lending side is always a big issue. And you brought up a good point, David. It's really important that you figure that out before you actually put a property under contract. The worst thing you can do is to put it under contract and then wondering how you can get the financing. Right?
Yeah.
So it might work on the single family side because you have good credit and strong income, but it definitely doesn't work on the commercial side. And everyone who has been in that business for a while, obviously they know about all the issues with property management. So it's definitely not a hands-off activity. You have to be really active, right? What about you, Powell? What was your biggest lesson jumping into it when you started out?
Yeah, you know what? I'm similar to David. Like that property management, I wasn't smart enough like David to fire them within 6 months. I kept my property manager, who was very subpar, for 3 years before I had to let them go. And now it's that, like, just, I don't know, when I look back on that, kills me. But it really hurt the property. I mean, and the property is basically suffered, right, because of that. But another big thing that I just wanted to throw out there that I didn't do on my very first property is I didn't put enough money. I didn't have enough money for CapEx. Because I was doing this kind of on my own. I was like, well, I moved it to CapEx. Yes, I have this money for CapEx. But then what did I do? Pretty quickly after that, I was like, hey, I'm going to go find another deal. And so I found another deal and I used that money that I used for CapEx to go find that other deal. And then I was like stretched. And then I was like, oh no, I don't have the money to basically make all the repairs that I need. And I'm kind of digging out of cash flow to do it. And it's like taking forever and that's bad. You got a property manager that's not going well. It's just like all these different things that like, hey, there's a lot of things that you don't want to do. So you don't want to hold on to your property manager for 3 years when they're not good, right? I was a little scared of, who else would I get? I don't know that many other property managers, this and that. Just like figure it out. Like there's other property managers out there. Get some references from, there's 100 people in here. Get some references from, many people, right? And then, keep that money in CapEx. That money that's for CapEx for your property, don't go spend it on buying another property and trying to scale and things like that. Or you do like I did, you could basically be in sort of a world of hurt when it comes to you need to turn over these properties. There's CapEx, there's big roof leak. You're just going to come out of pocket, right? You're going to come out of pocket. So I came out of pocket and I continue to come out of pocket sort of many times for that property. So.
Yes, guys, this is really an extremely important point. And luckily over the last few years, it didn't happen too many times that an owner or a deal sponsor lost the property. But a lot of it had to do with a perfect market environment. Having said that, there were still quite a number of property owners that we know that have been struggling with their property primarily because they didn't raise enough money initially for operations as well as for CapEx. So that's really a very important point, because if you have to plan and then you run out of money midway, it's not good. Right? So excellent point, Powell. Going along the same line there, what would you say was the toughest deal without having to share any details about the property if you don't want to? But what was kind of the toughest deal that you have worked with, and what was it, and how did you resolve it, Mandy?
I'm kind of in the middle of something right now. We had a 47 unit we bought out of receivership. It was condemned on Christmas Eve 2020. So we gutted it. We bought it for $620, put 1.1 into it. And this is a joint venture, just 4 of us. And right now we're waiting on the 200 amp main disconnect in order to be able to let tenants move in next week. It was supposed to have been to us over a month ago, and just a lot of supply chain issues and communication things. It's just a piece, like we have all of the things lined up, but it's I'll tell you, the way that we're getting around it is open communication and doing right by people. So our plan is tomorrow I'm going to get on the phone with all 10 folks that are supposed to move in March 10th and say, listen, we're in this worst case scenario. We'd like to offer you a free month's rent or to let you break your lease with no penalties. We completely understand. So I feel like in just about everything in life, if you put people first, then everything works out thereafter. So we're in it right now, Anton.
Hey, great, Mandy. Guys, just you didn't mishear it, right? So they bought a property for around $600,000 and put almost double of what they bought it for in CapEx. So obviously that takes a lot of guts. But the benefit is that once you're through that, you create a massive value creation very quickly. So congrats, Mandy, on doing that.
They pre-appraised for 3 million, so it's
Yeah.
worth the headache.
Definitely. Very good. What about you, Powell?
Yeah. So truthfully, my first one, which is the one we're talking about right now, that one is the most challenging one that I've had. And I still have it, right? And so it is, you know, it is one of those things that like I've had to come out of pocket for. Overall, it's basically broken even the whole time I've had it, right? So some days, some months I made money. Sometimes it's like there's more expenses than I've had to come out of pocket for. Basically broken even. However, what I did, luckily, and I guess this is probably the major thing that I did luckily, is that I bought it at a good rate, right? And I bought it at a good rate, and that's really kind of saved me in this whole thing. That if I didn't buy it at a good, you know, price, I would be hurting right now. So my mortgage payment isn't that much, and it's been pretty low, and I'm very glad, and that's been able to really kind of help me ride through this whole time. Now, because of that, because I've basically paid down a good portion of this of my loan during this time, I do have a good amount of equity in the deal. And the way that I've been able to sort of, my plan is to how I'm going to come out of this is I was actually looking to sell this property about 3 or 4 months ago. I was just like, hey, I'm just going to sell it. You know, I have enough equity in it now that I can sell it, right? But it's not at a good place to sell, right? It's you know, it's still like occupancy is really low. However, I decided instead of selling it was I'm going to partner with somebody. So I brought on a partner, and I brought on this partner who basically they're coming in with CapEx money, right? The money that I'm talking about that I don't have in the deal is that they're coming in with CapEx money to go ahead and finish out the rest of the build for the rest of the turnover that we have of these vacant units. So now I got a partner who's coming in, and we made our equity splits very fair. I mean, I really like how he proposed this. He actually proposed it to me as far as like the terms, and he was very fair and how we split up the equity. And he's going to come in and basically project manage all of that. And that's going to be his strength, and he's local. So that's been great for me. And I really feel like we're going to be able to get these units rented out, turn this around, and probably sell this property hopefully as early as this year, maybe a little bit longer, but it'll be a totally different story from, hey, I sold this property, the occupancy was very low. I just got lucky selling it when the market was very hot, right? And the only good thing I did was I bought it at a great price. That's a different story than, hey, I actually like worked through all of this, worked with a partner, and then we went through this whole series where, you know, we actually changed the property, fixed up a lot of units, got it rented out, kind of got it stabilized, and now we're able to maximize, you know, our returns on the property. So that's where I am. We're not there yet. We're kind of in the middle of it, but here we are working through that process.
Yeah, that's great to hear, Powell. Again, I think the lesson here is also don't be greedy, right? Yes, you may give up some of your equity position, but the sum ultimately will still be better than just attempting it by yourself. So it's definitely worthwhile to partner up with others, right? As long as you see that the sum of the two is creating value for both sides, right? What about you, David?
Every deal you do has a challenge. Like, I don't know of anybody that's done something and it's been super easy. There's always some headache that they have to go through. So just be aware of that. Every deal you do, there's going to be an issue you have to figure out how to overcome. I still think my most challenging one was the first one I did because I didn't have the systems in place. I didn't have the resources to, oh, I have this issue. I can reach out to Powell and ask him, or I can reach out to Anton or John or Ronnie or Mandy. There's like all these different people now that I could reach out to if I have a problem. And even though there's going to be more challenges, and I've had challenges recently, I still think that first one, where I was trying to do the deal by myself and had to figure it out myself, that was probably the most challenging. And that's just more of a mindset.
Yeah, that's really when you start out and you're on your own and you don't have a community to reach out to. It's very tough, right? So obviously, multifamily masters as a community is very helpful, but there are many others out there. So the more people you know, the more meetups you go, the more you get involved in that area, the more likely it is that you have people that you can reach out to when you need help, right? And that's a good point, right? When you start out, you just don't know, right? What you don't know. Along those lines, what would you say was one of your biggest mistakes? Obviously, we talked about lessons learned, but more where you look back and say, oh, I probably should not have done that. What would you say was one of those moments where you felt, oh, that wasn't good, and that's really on me? Mandy?
Too many to count, Anton. But the biggest ones have always been that I didn't trust. I always trust too much, but then I don't verify what I trust necessarily. So the same kind of thing that both David and Powell talked about, hiring a property manager that I knew him as a person and I thought he was great in this kind of tertiary market, Kenosha, Wisconsin. And then it was there wasn't a ton of competition for property management. So I ended up keeping him entirely too long. And then a business partner basically stole $110,000 from me. And had I done a background check on this bro, I would have known better. So if you and I are ever going to partner on anything, understand that your friend Mandy is going to do a full-on background check, and she's going to ask you about the weird speeding ticket you got when you were 32. You know, so that kind of manufactures a weird, awkward conversation, because think about it, in friendship, in marriage, in business partnership, that when it's all hunky-dory, it's easy. Like, it's easy to be a good partner. But when shit hits the fan, that's when you need really good communication. And if I can make you feel weird and make you then have a conversation with me, and if you get all awkward and terrible and run away, I know you're going to be a bad partner, regardless of if it's just a speeding ticket that I'm confronting you about, you know? So background checks, trust but verify.
Excellent point. By the way, guys, if you hide it from a prospective partner, no later than when you get into the loan and you sign on that loan, you can expect that the lender will do the background check. Certainly, maybe not for smaller loans, but definitely for larger loans, lenders will do the background checks. And the worst thing that can happen is that you tell your partners, co-sponsors, as well as the lenders, everything is fine, have a clean background, and then all these issues pop up as you get closer to the closing. It's not comfortable for anyone involved and potentially can actually sideline a deal. So just be open. A lot of people have issues in the back few years back. It's better to share that information, and if it's not a good fit, it's not a good fit, but please don't hide, right? Excellent point, Mandy. What about you, Powell?
You know, I guess first mistakes, and I would answer this as probably my wife would answer the same way, is that I didn't listen to her. So when I was choosing my property manager, she was like, I don't think so. She's like, I don't think so. Like, I just don't get a good feel for it. And I was like, no. I mean, I know I'm the real estate investor. I know, I'm sure. She was like, I don't think so. Like, she met him in person, didn't feel good about him. And so basically I hear about that for probably for the rest of my life, you know. So I get it all the time of like, anytime somebody brings up that property, it's like, she's like, oh man, he never listened to me. He doesn't listen to me on that property. So truthfully, listening to your gut, listening to your wife, listens to her gut a lot, and can understand those kind of things that, you know, you as a person may just kind of just say, hey, you know, it looks great on paper and this and that. You really need to trust your gut in those kind of situations, right? And if you see any kind of red flags and what they are, why you're seeing them, or why your significant other is seeing them, then you really need to reevaluate what, you know, your decision. I mean, that would have, truthfully, that small thing would have saved me a huge amount of headache, turmoil, money, time, resources, all kinds of different things. So, yeah, one small thing.
Yeah, unfortunately, that's very often when you look back, right? And then you really blame yourself. Oh, I felt it, right? My gut told me no, but you still think that it can work, similar to what Mandy said, right? Yes, I trusted, but I didn't really go deep enough. And then very often you learn afterwards. What about you, David?
Well, when you're managing or asset managing remotely from out of state, one of the things is always how often do you go to the property? You know, when should you go if something happens? You have the management company that's doing stuff. So we had a fire and a unit burned. Nobody was hurt. There, you know, it's just the unit that was damaged. But I was trying to decide, should I go or not go? And I thought, well, the damage is already done. Management company's there handling it. We'll see what the fire department says, start getting the insurance going, and then maybe I'll go out in a week or so when we're ready to meet with contractors and do work on it. Well, then a week later, then there was this whole thing of, well, was it arson or was it like the fire department didn't really say what the cause was. And now there's this issue with the insurance company. So I hopped on a plane and flew out and like took pictures and kind of assessed it myself. And I really wish I'd gone that like day one, like there's a fire, even though it's handled, just get on a plane, fly there, check it out. So I think that's one of the things I've kind of learned going forward.
Yeah, also excellent points. Insurance is always a major headache, right? And it can be dragging out for a very long time. I would say it's also an issue that we need to closely look at if there is still a claim while you buy a property, that you are really clear with the seller how that the insurance claim should be handled, and that it's a part of the discussion right from the beginning. Very good point, David. So now all you guys obviously have been active now for quite some time. So for someone who starts out, you have already touched on in different ways, but maybe you just can give a little bit more of your view and suggestion of, if someone starts out today, what advice would you give them? Mandy?
So in my opinion, I do a lot of like coaching around small multis. My wheelhouse is, 5 to 50-ish units. I've gone bigger, I've gone smaller, but that's really where I see a lot of value. In my opinion, the thing you have to do first is decide what you want to do. If I'm gonna, punch into Google Maps that I want to go to Texas versus LA, I have to put the North Star, the thing I'm running at, first. Do I want to be a passive investor? Do I want to be a general partner in a 50 unit? Do I want to invest in value add properties with somebody in the Texas Triangle? Whatever your thing is, decide that one thing, and then you're going to know what to go look at. Because I'm here to tell you, if you prime your brain with what you're looking for, you're going to see it. Like I just put a down payment on a Tesla, guys. Now they're everywhere. I see them everywhere because I now am looking for them, right? So whatever your thing, prime your brain for it, decide, and then take the next right step. I would say too, that if you are one of these young kids, I don't have a lot of regrets in my life, but one is that I didn't house hack. My God, if I could have bought a fourplex and lived in it when I was 22, thinking about this and not been too cool and needed to live in the awesome neighborhood of Chicago, like I would have been retired 10 years sooner. So consider house hacking if you're in a position to do it. It's a great toe in the water, but decide where you're going first.
Yeah, excellent points, Mandy. Now, guys, certainly the house hacking when you start out, whether it's a single family and you rent out a couple of rooms, or if it's a duplex, triplex, fourplex, and you buy one, you live in one, and rent out the other 2 or 3, this is a great way to start. By the way, there is also a book by Eric Upchurch with a couple of his partners, which talks about military house hacking, which is only if you are a service member, that is a crucial thing to do. reach out to Eric whenever you can. He has a wealth of knowledge in that area. And rather than just splurging all your money on a new car just because you can, try and do that house hacking model also when you're in service. So just as a kind of a side note there. Thanks, Mandy. What about you, Powell?
I mean, I went through this just recently with learning a new asset class, right? Because when you're learning a new asset class, basically starting at the beginning. Now, I do have since I did have background in multifamily, there was a lot of translatable skills and a lot of translatable experience and resources. But when you're starting over, how are you going to start over? Well, the first thing for me was really education, right? It was really like figuring out, okay, now I got to learn about this asset class. So I got to I basically poured through as much free content as I could, which means forums, podcasts, webinars, all kinds of books, everything that I could to figure out, is this asset class going to be something that I want? Which is what I suggest you do if you're starting out in multifamily as well. You got to educate yourself to figure out, is this something that you want to do? It's not something you want to do, and something you have that sort of capability of doing that fits your skills, right? And the other thing, once you are educated and once you are, joining groups, I would say that you should look to start partnering soon, right? Yes, it would be great if you could take on all the properties by yourself. But I would tell you that one of the most difficult situations with my property that I own by myself, that very first one, is that I own it by myself. And I have to do everything that's involved in it. And I don't like to do everything. I'll tell you, I'm not the operations person. I don't like to do operations. I don't like to get into the nitty gritty of this and that. And, like, should we look at this color versus that? And what's the square foot cost for this and that? I'm more of a high level, big picture kind of person, right? And I like people, and I don't really like to deal with all these spreadsheets and things like that. So when I'm forced to do that all by myself, because the idea is like, hey, I could have a property all by myself. Well, then you have to do everything. And truthfully, that just slowed me down a lot. So I would suggest, number one is educate yourself, right? Figuring out what, do you like this industry? Do you have the skills, or what skills do you have that can fit in this industry? And then figuring out your partner situation where you can partner with somebody and bring your certain skills, and hopefully they're complementary to somebody else's particular skills as well, right? And sometimes your partners
very particular skills.
Yeah, exactly. You got to say it. You got to say it with an accent, though. And that partnership, I'll tell you, my partner that I'm in business with is somebody that I met at my meetup. He came to my meetup. We became business partners. There's been, I don't know how many scores of business partnerships that have come through Multifamily Masters, but there's been a ton. I know of a bunch, right? So it's a great place to find partnerships inside of this group as well.
Yeah, excellent point, Powell. By the way, I mean, the reality is all of us here who are on, we know each other from meetups and networking, right? So that's just the way it is. And obviously, you do not just go to one meetup or to one networking event and you partner up with people. So you get to know each other, you meet more and you meet more, you discuss more, you see how everyone is operating, and ultimately you may partner up. So excellent point. David, what about you?
Well, I also have gotten started doing house hacking. I do house hacking in LA. I think you live in any city where you have a lot of appreciation. It's a great way to build equity that you can go deploy in other states and get cash flow. But my big thing is, if you're buying a property, you're not buying it to sell in 1 year and make a lot of money. It's a long term. You're buying it. Everybody has 5 to 7 year holds. So it's like 5 to 7 years before you're going to make money off the property. And you make your money in multifamily usually when you sell the property. So there's a lot of coaching programs and people that have, oh, let's cut corners and you get a lot of deals. I think that everybody should just be realistic and realize that you're not going to quit your job and be doing this full time in the first year. this is a playing the long game activity, and it's going to take a couple of years before you'll really start making money and can quit your job. So it's just keep plugging away at what you're doing now, building your side hustle, and then eventually you'll start making more money off your side hustle than you do off your job, and then you can quit and just do real estate.
Yeah, thanks, David. Yeah.
I realized that it was costing me money to be chasing doctors around to do these implants.
So this is what David mentioned here. I think is a big wake-up call for, particularly for graduates from these coaching programs, right? Because a lot of these programs they cost a pretty hefty penny to start out, and actually everyone thinks, okay, now I spend all that money, now I need to make money. The reality is, when you're a syndicator, your first year. Definitely, maybe even your second year, you may not see that much of a cash flow as a syndicator, right? So it's really important to understand. If you do something more like Mandy, where you are doing joint ventures and you partner up with just a couple of people, then it might be a little bit better, right? And particularly when you buy a heavily distressed property and you're able to turn it around very quickly, then you may enjoy cash flow faster. But otherwise, it's just not something that comes overnight. So very good point, David. I think also what the overall theme by all three, what all three have mentioned really is focus. Why do not chase that shiny object? As Mandy mentioned, I put a down payment on a Tesla and I see them everywhere. That's really when you look for properties and where you want to invest, it's the same thing. Whether it's single family or multifamily, everyone you see so many deals, and unless you focus and you know what you want, you are spending all your time looking at deals, rather than ever doing a deal, right? So all great points there, guys. So when we've what do you say when it comes to, obviously we talk about coaching, but if you do not, apart from the coaching side, what would you say when you have started out? What are some of the tools and resources that you had access to that were really helpful for you, and what you're still using today?
So getting really comfortable with the numbers so that I knew what a deal looked like, so that I could smell a deal, so that I had confidence to come in strong with an offer when I saw something that I knew was a deal. For instance, just like I'm a bargain shopper, you guys. Like, I know that when toilet paper is $16 at Costco, I got to buy all the toilet paper because it's never getting cheaper, right? So now I know in this granular little area that I'm looking for what a deal looks like, when I can get that extra couple $100 in rent in these markets that I buy in. So for me, when I first started, I found an underwriting model that worked for me, and I made an underwriting accountability buddy. And then we just got a bunch of OMs and we went into separate little corners of the world. And then we came together on Zoom and said, all right, I would offer 4.1. And she'd be like, all right, 3.2. And I'm like, oh my God, what did I do? And that conversation is what got me really comfortable around what I needed to see in terms of returns in order to go do a deal. So once you get really comfortable with the underwriting, sure, you might be a big picture person in that you don't then touch it as much if you're going to really kind of pair out what you're doing, but you got to get comfortable with the numbers, because multifamily, more than any, other real estate investing, in my opinion, it's all about the numbers. The value of the property is based off the NOI, right? So you got to know what you're looking at. So figure out a way to get comfortable with those numbers.
Excellent point, Mandy. What about you, Powell?
Those type of resources wise, just to piggyback on what Mandy said, I think it's really super important, especially now. I mean, underwriting, although I'm a big picture guy and I don't like to get into spreadsheets, I kind of cut my teeth doing it and know it well enough that I can read between the lines. I think you need to get to that point where you can read between the lines, because there are a lot of deals out there that whether they're from the broker or whether they're from a person who is a multifamily operator who put it under contract, that if you don't actually underwrite it, and I mean actually look at all the expenses, income and expenses, and actually do all the underwriting yourself, it's going to look great on paper, right? But if you don't, you're not going to know. And if you don't know how to figure out like, hey, they're really just kind of juicing up these numbers, and I can see it right here, you're almost putting yourself in a really precarious situation right there. So that's super important. Like, I just wanted to, you know, I didn't really necessarily have any other resources. You know, I would tell you this in terms of like the differences. I told a couple of people whether you're in a coaching program or you're not in a coaching program, there's kind of like the fence of, you know, whether to join or not, whether it's worth it or not. I would tell you that either way, you're going to have to build up your network as strong as possible, and have your network help you to move forward. Because if you just do this by yourself all day, which I did in the beginning, which was like sitting in front of a computer all the time and doing spreadsheets and calling brokers, I mean, to me, that just kind of drove me crazy. And that's why I started this meetup, because I wanted to meet other people who are doing it. And your partners or your people in your network can bring you faster than if you just do it by yourself. You might be that lone wolf person who's like, no, I got to do everything by myself, and I don't really want to meet other people and everything. You are going to grind at this for a long time, and it's a difficult grind. You can do it. I have friends that do it, but I'm like, look, if you just had some partners, sometimes your partner is able to find a deal, and because they like you, they'll bring you into the deal. And you didn't have to find the deal by yourself. Now you can analyze their deal and you can figure out if it's a good deal, and then you can get in on the deal. And you didn't even have to do all that. You didn't have to put it under contract or anything. So, you know, if you can really just make your network strong, your network can help you accelerate your path. Rather than if you do it by yourself, it's like pushing that heavy ball up a hill, and it's, you know, eventually you'll do it, but it's just going to take a long time. If you got a few people helping you out, you're going to get that big ball up there a little faster.
Yeah, excellent point, Powell. As they say, your network is your net worth, right? And that's really ultimately what it is. Your network needs to be strong. The team you put together needs to be strong. And even for everyone who has been in that business for a long time, including myself, it's still important that one can bounce off ideas and opinions with others, right? Even when you think that you know everything about a property or about a market, there are always others that can give you that nugget where you say, oh yes, that's true, I forgot about that, or yeah, that's a good point, I have to look at it from a different way. What about you, David?
Well, I think a lot of people get hung up on underwriting. So I think a good resource is just finding a good underwriting model or spreadsheet that you like to use for underwriting. And there's a lot of good ones out there, like Rob Beardsley has one that's good. Think Multifamily has one that's pretty detailed, I really like. A lot of people I know use Michael Blanc's, and they keep updating that, and that one's really good. And then David Tupin has like a platform that just came out, a Real Estate Lab. And I haven't played around on that much, but that seems like that's a really interesting platform where you know, you can go online and underwrite your deals and kind of manage your deal flow. So that might be good to check out also.
Yeah, thanks for these tips, David. I would say maybe what I also want to add to that is pick one tool and really understand that tool, and then use it all the time so that you really get comfortable with it, rather than trying to figure it out every single time from scratch, right? It's the time you spend on the underwriting side needs to be really efficient, and the more time you spend just plugging in numbers is not really adding any value, right? So all great points, guys. So are there any questions from the audience? Please either raise your hand or put a question in the chat box.
I want to say one more thing about this partnership stuff while we're on it for newbies. if you are new, like, I mean, I feel like probably David, Powell, anybody who's a little more experienced on the line here, a lot of people come to me and say, hey, I want to partner with you. What can I do? Well, two things here, right? What I really need is someone who's very detailed and very entrenched in a market, right? So someone who's going to be able to find deals that are the type of deals that I want to see. That is the type of partner I need. So whatever you are bringing to the table, be very specific in your ask. Not like, Mandy, whatever I need to do, I can help you. Well, no. Hey, you know what? My day job is I do search engine optimization, whatever. Can I help you with your website? Oh my God, that would be incredible, right? If you are very granular and specific on the way you can help the person that you want to help out, then I don't have to dream up a way that you can help me, and I'll be able to see what your partnership skills are when you come to help me with that very specific thing. So know yourself and what you bring to the table and be specific with it.
Yeah, great point, Mandy. I think along those lines also, it's important that you really pick the team and add strength to it rather than just another individual just because you can, right? If you have too many individuals on the team, that's also a problem, because then first of all, you have to share all the profits with more individuals. But equally important is that when you have too many team players, and everyone thinks that someone else does the work, right? So stick to a few that really can dig in and help with a project. One of the questions that came in is, how much did you put in when you started with multifamily? That was from Satya. I assume that the question relates to money. So Mandy, why don't you answer that?
My very first multi was a 4-unit. I put down 25% because I followed all the rules, right? But generally speaking, what I've moved towards is partnership, where we're putting in on agency debt what we have to put in based off of the market, what we're able to get in terms of loan to value. So it was 20, but I mean, guys, it was 25% that I put down on that fourplex. It was $120,000. You can find something to do. Yeah, that was like, that's no money at all. I was scared to death to do it. Like, just get in and you'll see that it's totally possible.
Yeah, very good point, right? And if you buy a larger property, or even if it's 1 to 4 and you cannot do it on your own, well, find someone who wants to partner up with you, right? The reality is, the larger the deal gets, the more likely it's going to be that multiple partners are putting in money for the initial earnest money. And obviously, when you syndicate, the big chunk of the money comes from passive investors anyhow, right? Excellent point. Do you have anything to add, Powell or David?
Yeah, I can add on this is that, look, everybody comes in with a different amount of money, right? So there's not like one set amount of money that you have. But what I would suggest is that you think of like whatever you have. Say you have $100,000, right? You think I can invest this $100,000. Well, hopefully it's not all going to go towards the down payment, because you're going to be in a situation like me that you don't have any money towards CapEx, right? So you need to be able to allocate some of that towards CapEx. So you're going to want to take 75,000 of that and put it towards a down payment. Now, if you do that, what does $75,000 get you as far as like what type of property can you buy? Well, that's probably going to be in the sort of the, I don't know, $300,000 range, right? So that can help you figure out like what type of property. Okay, I have $200,000, so I got to put 50,000 towards CapEx. So I could put 150 down. Well, now I know that I'm buying something that's in the $600,000, $700,000 range. And I can tell that to the brokers that I'm talking to, and I don't have to look at a $2 million deal, because if it's a $2 million deal, I can't do that by myself. Maybe I have to partner. So I don't really need to, unless you have the partners kind of set up and you kind of know that you guys can both achieve a $2 million deal, then you don't need to worry about that. So just forget, I don't need to analyze those deals. Spend the time on what you can handle, in terms of your financial situation. And if that may be your financial situation plus a couple partners, well, now it opens you up to a little bit larger of a property, right? So understanding how much you can put as your down payment plus your CapEx can give you your sense of where your limits are. And then you can say, forget everything else. I don't need to worry about that $5 million deal. We're not even close. So forget about all that stuff. So hopefully that helps.
Yeah, that helps a lot. I would say it's what you brought up is actually really important, particularly when you team up with a couple of other people, that everyone is honest of what they can bring to the table, right? We have seen situations where everyone says, oh, let's buy that 100 or 200 unit property, but no one in the team really has discussed how much each of the team members can contribute initially and how much they can realistically raise. So everyone was talking about these big deals, but no one was really willing to say what they're actually able to contribute, right? What about you, David?
My first deal, I did, I think it was around 700,000 down, including closing costs. But my advice is, it's like if you're buying a single family house, your first stop should be talking to your lender, finding out how much you qualify for, and then go start looking for your property. So, you know, if you have $100,000, then your lender might say, oh, you can get this, but if you partner up with somebody, you could get that. Or if you're going to buy out of state, you might need this other qualification. So that might be a good starting point to find out who you're missing in your team to be able to go do the acquisition that you're looking for. Because like if you're doing your first deal out of state, then they're going to want you to have local experience. So maybe if you're buying in Tennessee and you have a friend in Tennessee, then you can partner up with that friend, and that kind of gives you the local experience. So I think starting with the lenders and asking those questions is a good start. Yeah,
excellent point. I think one question from Prasad is, I don't have a brand, right? Do you suggest I find partners who can raise money and on deals, and I focus on finding deals and operations? If so, where do I find people who can reliably raise money when you're under contract? I'll leave it up to you to answer that, Mandy and everyone else, but I just wanted to mention one point. Please do not talk about raising money when you're already under contract. You really need to have that team together before you have that. Please reach out to some of the SEC lawyers that are out there, like Mauricio on the West Coast. There are a number of others here in Texas that are excellent SEC lawyers. So you always have to think of what the SEC laws require when you raise money. And one of them is that don't go under contract and then start reaching out to people where they can get a small GPPs for them to raise money. Mandy, what suggestion do you have there on finding partners and finding people to raise money?
So understand that most people who are too nervous to raise capital are like, oh, I don't have a track record. I can't talk about, I don't know what I'm doing because I don't have a track. Bro, you got a track record. What you do is do a webinar of the stuff you've done, talk about the things, the value you've been able to add, all of the things that you've been able to pull off, and your friends and family are going to want in on what you're doing. Okay, so consider that as your number one. Figure out whatever soft commitments. In the end of it, make sure you have a call to action. You can do just a Google form that's like, yes, I'm accredited. No, I'm not accredited. Here's my name. Here's how much I would want to put in. Yes, I have a, go to my website, mandymcallister.com. I have on Good Fortune Capital. I made a little Google form so that people can qualify themselves, and just do that at the end of your webinar that you're presenting the stuff that you're doing. So I would say don't undercut yourself because you got a track record.
Excellent point. Powell, anything else to add to that?
Yeah, I mean, you know, it is okay to say like, hey, okay, my strength may not be raising capital. My strength may be underwriting or operations. That is okay. I mean, you can find other partners who can potentially they have a larger network and they can raise capital for you, and you can go out and work on finding the deal. That is okay. I will tell you that at a certain point, though, you probably want to start raising capital too for yourself, right? You want to get people to know who you are and expand your skill level, right? And what you're doing in this game. So sure, you could start out with you know, focusing on a certain thing. And then you just want to network with a bunch of people. You know, you're going to want to talk to Ronnie and John, right? About like, hey, what is their focus? what do they do? I'll tell you what, I already know what they do, but you need to call them and find out, hey, what can they do on a deal, right? Because they can certainly help, right? So, I mean, you know, it's good to know what your strengths are and so that you can explain that to people, what you can bring to the table. But when it comes to raising capital, I would say that it's not something you want to shy away from your whole entire career with multifamily. Eventually, you want to expand your network and you want to talk to people about what you can do. Yes, maybe you focus on other things, but you can still raise a good portion of capital in letting people know what you do. Yeah, great points, both you and Mandy. Well, to summarize that really is get outside of your comfort zone, right? That's a big part of it. David, anything else you want to add?
My strength is not raising capital. So I have met a lot of people that have better connections and are better at that than I am. So I'd like to have those people on my team. I think it's great to find those different people that complement you, but also it's good for you to be able to raise your own capital too, because there's times that they may not be able to raise what they think they can raise, or there's times that a lot of your friends and family just want to be involved in what you're doing. And you go to a lot of these events and you meet people and you save the chat. The three little buttons, 3 little dots down at the bottom let you save the whole chat, and you can get everybody's contact information. And now you're friends with these people and you start building relationships with all these people, and then maybe some of them might want to invest with you. So just start networking and find some deals and it'll all work out.
Yeah, great point. Jeff asked, where do you look to find your first deal? Mandy, where would you say? It's obviously it's very tough to come up with a single right answer.
Dude, you got to pick for you. Like, where do I find my first girlfriend? Like, bro, you got to go out and figure out the thing that you're looking for. You make decisions about what you want. Like, I want a Class B 50 unit in the Midwest, right? So if that is the thing that I am looking for, I'm going to go find it. So whatever thing brings you the outcome that you want, you got to decide that first, and then you'll know where to look. It's like that Alice in Wonderland thing. Like Alice comes upon the Cheshire Cat, like, hey, what direction do I go? And the Cheshire Cat, where are you going? Well, I don't know. Well, then it doesn't matter where you're going because you don't know where you're going. You got to pick where you're going first.
Great point. Jake, I think that's your name. You need to unmute. You raised your hand.
Yes.
Go ahead.
So it's a question for Mandy, but I guess it applies to everyone in context of the conversation. So I have, I know a lot of folks who have done a lot more in multifamily than I have, and I talk about learning about acquisition strategies and whatnot. And I've been told by a lot of people who have way more experience than I do, that the mailers that Mandy used earlier in the presentation was not like a good thing, or maybe it doesn't work as well in multi versus single family. And so yeah, I was just curious to know, like, is there like a certain number of doors where it works better? I'm assuming like the mom and pop thing.
Yeah.
Number of doors where like it's doesn't work as well because it's more REITs or the higher level. So yeah.
So a couple of things on this. One, it never worked for me. I was really targeting the 10-ish unit space, but I never bought anything off of a mailer. That being said, my primary business partner, who was my co-host at the Chicago meetup, Brian Kokendorfer, he has a 40 unit in Cincinnati that he bought off of a mailer. So it can work. That being said, I mean, I think we overcomplicate a lot of this, right? Like the marketing to a tenant, just think about if you were the tenant, what are you going to do? Like, that's all you got to do. How am I going to get in front of a seller? Well, if you're the seller, think about if you're the seller, what are you going to do? Right. So if you're an old dude who owns a lot of properties, you're probably going to read a newspaper and not go on Instagram. You know, like you're probably going to answer a mailer if you're, but you're probably at this market, you know, you're probably getting the advice if you own a 50 unit to go on market because things are so bananas. So in my opinion, I shifted my focus to working with brokers because those are the deals that I'm getting, and I'm buying that higher class, that B class type asset to write out any correction that we might end up coming that that's just been my approach. So it can work. I've seen it work. It hasn't worked for me.
Yeah, excellent point, Mandy. Obviously, I would say do what works for you, right? It may work for some, it may not work for others. I would say overall of what we see, right? We see tons of deals out there in the market. We work with a lot of sponsors. The majority of all the deals come through brokers, even when they are so-called off-market deals. That's just the reality. But that doesn't mean that one sometimes is lucky and finds a deal through a mailer, right? Prasad, do you have a question?
You're muted.
You're muted. You need to unmute.
Oh,
Yeah, okay.
sorry. Thanks for letting me know. Yeah, thanks for giving me a chance to ask my question. So my question is, in this market, like, is it better to do deals wherein we are buying market deals in locations that we anticipate rent growth in the coming years, and we pay the market price, which means you don't really see cash flow for the first couple of years, right? On a large syndication apartment, right? I'm talking about 100 plus unit apartment where you raise money. So is it kind of safe to do such apartments, right? Or or is it kind of better to just kind of do smaller deals without syndication, wherein you kind of walk in with some equity, like, you find some, just looking at current numbers, you find some discount or, forced appreciation due to, increase in rents and so forth, right? So, what are your thoughts? Like, is it too risky to kind of buy deals at market price and, but still they pencil out? If you look at 5 years down the lane, they still pencil out if you, put in the rent growth numbers and expense growth numbers, and, investors get to make, say, double their return, double their money in 5 years, and, and get their, like, 5% cash flow overall by the end of the 5 years, right? So
you stand a chance to analysis paralysis, my friend. Smiley face with love. It just depends on what your strategy is. I feel like, what is the plan? What do you want to get out of this? In my opinion, my strategy has shifted such that I want to do joint ventures because, there's a little easier legacy asset story, because I want to be able to hold for a full 12 or 15-year agency loan with as much interest only at the beginning as possible to juice my cash on cash returns from the beginning. And also, if it's my firm belief, my master's is economics, my firm belief that given the money supply, if you Google M1 and see the hockey stick of dollars in our economy, that this inflation is here to stay. So I feel like for Mandy McAllister, if I buy a B-class asset very close to market, that cash on cash is enough for me because of the type of loan product I'm able to get, then I'm going to be able to ride that into the sunset because I've locked in that low-term debt for the long term. That is a Mandy McAllister strategy. What is the Prasad strategy is my next question to you.
So, Mandy, are your investors okay with that kind of returns?
I have partners. I have 2 to 4 partners in any deal I do, and we own it and we kind of equity hog it, because we, if rather than give away 70 or 80% of the deal, like I'm lucky, like I saved my face off in my medical device job. I have some capital. I made some friends with more capital than me that like the ideas that I'm putting forth, that, they want to bring, a $500, $100 million check to a deal to be my partner, right? So it's a different strategy, but it's a different end, right? You got to start with the end in mind.
Yeah, excellent point, Mandy. I would say, right, whether it's Brossard or anyone else, the return is the cash on cash at the right level for you or not. So that's the question. If it is, go into the deal. Is it for your investors? Yes or no? If it is, then you're able to raise the money, right? So ultimately, there is always a threshold where you're able to get into a deal that is comfortable for you or not. But that comfort level, and there is another question: what are the right ROI for Class A, B, and C? The reason, the reality is, it's a different answer for every single individual or investor, and you need to figure out for your own comfort level as well as for investors what really works. So thanks, Mandy, for that. So we are well past the 1 hour mark. So I want to be making sure that we are not taking your too much of your time, all three of you. We also want to do a breakout session. So if you guys still can be on, that would be great. But if you have to jump off, that's fine too. If any of you guys still have a question for them, obviously you can ask that during that time. But before we go, just make sure that all three of you, that you put in your contact details in the chat box if you haven't done so yet. And I think David mentioned, or Powell mentioned, I think it was David, make sure that that you click on these three dots in the chat box at the bottom, and then make sure that you save the chat, so you don't have to copy and paste every single information that is in there. So you just save that chat, and then you're all ready to go and look up the contacts of all the individuals that you made tonight. So do you have any last word that you want to mention, Mandy, before we go into the breakout rooms?
I'm muted, sorry. Don't overthink it, guys. I feel like, I mean, Mandy 6 years ago went to a meetup that I was too nervous to go into. And now I'm retired because I have enough cash flow. You just got to get in the game and learn what you need to learn, and then just go make it happen.
Great advice, Mandy. Powell?
You know, I mean, you guys are doing the right thing by joining these groups, right? Joining these groups and networking, learning as much as possible. The learning and networking is really what Multifamily Masters was born to do. It's born to help you network with the right people and network with many people, and then you know, form a community and learn and educate people, right? So you're in the right place. Continue to do that and bring more value than, like, if you're looking to partner with somebody, bring more value and bring that value like early, is what I would suggest that people try to do, right? Don't try to hold back. Try to go overboard. So go the extra mile when it comes to like your partnerships. That's what will attract other people to you as well.
Yeah, excellent advice. David?
I think a lot of people get hung up on what can I buy, what can I do, and they should be thinking about what can we buy, what can we do? Because again, this is a team, and if you partner up with a couple of people, you as a team can do a lot better than you can do as an individual. And then somebody, I think in the chat, asked about, you know, what they can do for their first deal. We should also think about what can you do to help somebody else with their first deal. Because if you are here and you don't have any cash, you're like, oh, I can't buy anything. Well, maybe there's somebody else that's trying to buy something, and you can help them with their underwriting. You can help them put their flyer together that they're going to send out to investors. There's lots of different ways you can help people. And maybe you don't get anything out of it, but you're just learning, you're getting experience, you're giving back, you're helping other people, and that's all going to come back around, because this is such a small community. Everybody knows each other, and what you do to help people out now is going to pay back to you, you know, 2, 3, 4, or 5 years down the road.
Yeah, excellent point too, David. I think that's really great as a to close it out, right? It's add value to others, and the value ultimately comes back to you, right? So it may take some time, particularly when you start out, but that's just the way it is in life. When you add value to others, they will be thankful and give it back to you at some point. Thanks again, guys. We really appreciate that you came on and talked about your experience and answered all the questions. So if you can hang out with us doing the breakout rooms, great. But if you have to leave, that's fine too. But thanks again. Thank you very much for coming on, guys.
You're welcome. It's great to see everybody.
Yep.
Loved it. Thank you, guys.
Yeah. Yeah. Thanks, everybody. I'm going to stay in the breakout room. So let's do it.
Yeah.
I'm over-caffeinated, so you're stuck with me.
All right. So let's see how these breakout rooms are going to work here.
Just want to say, y'all did a fantastic job. Thanks so much.
Thanks, Ronnie.
For adding so much value to our community. And just make sure y'all click the chat and click those 3 buttons and download. So that way you get everyone's contact information, and don't hesitate to reach out. You know, I think that's another key thing when we're on these online meetups is sometimes you're shy, don't want to turn on the camera. This is what it's for. We want to help each other. So the next session is going to be breakouts. We're going to do probably 5 or 6 people per breakout room. Anton's working on that. And this is probably the best part of the event that I love. I think the way we structure it's fantastic already, but this way you can have more one-on-one small discussions. So, and those who haven't
how long is the breakout room going to be for?
We probably do it for 15 minutes or so.
Okay.
Yeah. All right. Very good. So see you guys in the breakouts. John Montero, I don't know where you're on, but thanks for also, as always, joining us here. So thanks again,
I'm
guys.
staying on.
Yeah. So see you in the breakout rooms.